Okay, hello, good afternoon everyone. Before I start my presentation, let me introduce myself first. My name is Miftarizza and you can call me Mifta, and I'm from Diponegoro University. It's such an honor to be here. Thank you for SMA 6 Jakarta for inviting me to be speaker in this event about Get to Know Accounting, and my today's presentation is about the bank reconciliation. And I have divided my topics into 4 parts. The first part is we're going to talk the definition of the bank reconciliation itself, and the second point we're going to discuss about the purpose of bank reconciliation. The third point is the terminology, and then the last but not least we're going to see the example of bank reconciliation statement. Okay, without any further ado, let's get started to the first point. The first point is the definition of the bank reconciliation itself. Do you guys know what is bank reconciliation? Okay, so bank reconciliation is the process of matching the balances in an entity accounting record for a bank account to the corresponding information in the bank statement. So then, the goals of this process is ascertain the differences between the two and to book changes for accounting record as appropriate. Okay, now next we're going to the second part of my topics. It is about the purpose of bank reconciliation. So in this part we will know why do we have to make bank reconciliation statement. So number 1 is due to timing difference, omission and error made by the bank or the firms itself. And then number 2, the balance of the bank statement and the bank account it's not approved yet. And then number 3, there's an error when bank making a statement. For example, it has to be 4,000 rupiah, but the bank only wrote it 400 rupiah, for example. And then the last is to make sure that there's no difference between the bank statement and the firm statement. Okay, next we are going to the part of my topics. It is the terminology. So terminology is kind of the reason for the difference between the bank statement and the firm statement. There's a lot. Number 1, there's uncredited debits or checks. So these are a check received from the customer or other sources, and then the firm has bank, but the bank has not availed the fund yet. And then number 2, there's unpresent check. And then number 3, there's a standing order. Number 4, there's a direct debits. Number 5, there's a bank charge. So bank charge is charge made by the bank to the company for banking service. And then number 6, there's dishonor checks. So this is a condition when the bank cannot pay the amount for the check to the pay. And then number 7, there's an interest low by the bank. Okay, that's it for the third part of my topics, and then we're going to the last part of my topics. It is we're going to see the example of bank reconciliation statement. You can see here. I hope that everyone can see it. I hope it's clear enough for everyone to see. As we can see here, let's take a look at the top. So in the top it shows us the bank statement And now we're going to the bottom side. It shows us the firm statement like that. So this is the example of bank reconciliation. Okay, that's the end of my presentation for today about bank reconciliation statement. In brief, basically, we make bank reconciliation, so there's no difference between the firm statement and the bank statement. So then I can conclude that making a bank reconciliation statement is important, so there's no any mistake statement again. And then that's it for today. If you have any question, you can contact me by email at miftarizza@gmail.com. Thank you for attention. Goodbye.